Hi everyone, Ben here with Kevin King from Centum Financial Services.
You can say the Mortgage King.
The Mortgage King. The Mortgage King.
I've been going with that lately.
Nice, I like that.
I'm by far not the Mortgage King.
But your name is...
In this area, I do a lot of mortgages.
Yeah. No, fair enough. If the shoe fits, wear it.
Kevin the Mortgage King. Ring a ding ding, call Kevin the Mortgage King.
Oh God. The jingles write themselves.
Yeah.
Chatting a little bit about mortgages, some stuff that maybe would be good to know if you're thinking about either refinancing or really doing anything with mortgages in the next little while. For people that don't know anything about mortgages, interest rates, haven't read a newspaper in the last 5 years, what is going on in the mortgage world? What are the things that the average person needs to know?
It's actually probably one of the most unique times that I've ever experienced in the mortgage business. Lenders have, a lot of people don't understand it, but the fixed rates come from the bond yield and the line of credit rates come from the prime rate, which comes from the overnight rate the Bank of Canada lends the money to the banks at. So fixed rates are constantly changing all the time, but typically there's a lender yield, and historically lender yields are like 1.2, 1.3. Got a little more aggressive over COVID as they were kind of, banking on some big shocks to happen. But now what's weird about it is, so I have 3 lenders that have basically reached out and said, because of my volume I do with them, they're saying, that's the posted rate that you see, but we got this other rate for you, and we're looking for this specific kind of client. They want a larger mortgage size, good credit, good house, and then you get a significantly discounted rate where that historically has never ever happened. There, some lenders will have some promos from time to time, but not to have 3 separate ones reaching out saying that. It's definitely a weird time. So there's no point in running around talking to a whole bunch of different banks. You're just gonna get your credit pilled, put a bunch of applications, but talk to a bank, talk to a mortgage broker, a good experienced mortgage broker, come up with the best fit for you, and hopefully the rate's good and the product fits for you. But it's super important to understand the difference between using a bank and a mortgage broker. The person at the bank's paid a salary, and typically they get a little bit of income as well from the mortgage. And where a mortgage broker, or most mortgage brokers anyway, some firms have some different arrangements, but just like you as a real estate agent, we don't get paid unless the deal gets done. And I'm not working specifically for anybody telling me what to sell. The bank employees typically are told, push this product, push that product. So are they really looking out for your best interest? My guess would probably be no. Yeah. And in the bank cycle, a lot of times they'll start as a teller, and then they move to some investments, and they move to car loans, and then all of a sudden they have them doing everything. Mutual funds, all the mortgages, all this stuff, wherever we can fit you in. We're us, we just do mortgages. That's all we do. The challenge now that we're faced with, I've been doing this almost 25 years, it's affordability. The people they don't have the income to qualify for these prices where we're at today.
Yeah. You were saying something earlier about what the average household income has to be to buy, what was it, a $600,000 house?
A $650,000 house with a minimum down payment now, which is around, it's $40,000. Because it's 5% on the first 500 and then 10% on the remaining.
Gotcha.
So that's plus your closing cost. So you're probably, you need to show us that you got around 50,000 approximately, and 40 is going to go towards your down payment. Then they're charging you a 4% CMHC fee. But the income needed as of today, roughly, depending on the property taxes, locally Penetang has high property taxes. The deal might not work in Penetang, but basically you need 170,000 in household income with no debt. So that's wow. That's a huge number.
Yeah.
There's not a lot of houses locally that I think have that number.
No.
There's definitely more that do not have that number than do.
Yeah. And
that, it's not a starter home in the area, but you're getting into, for sure, I would say like a nice little mid-ranger maybe, or something like that.
Yeah, I mean, definitely, because I think average price last month was somewhere around like $550 for Midland. Mm-hmm. So I mean, depending on like if you want a little bit of property or like further out in the country, yeah. Mm-hmm. Which is, I mean, that's tough news for, I guess, people trying to get into the market.
For sure, yeah, absolutely.
So just to kind of circle back to what you said about the rate discounts from these big lenders with like these, perfect clients with, good credit, larger mortgages. Are these kind of rate discounts, are they for people who are existing clients, already have mortgages looking to renew, or is there any way like somebody just getting into the market, getting their first mortgage can take advantage of some
No, for sure. Lenders prefer a CMHC insured deal. That's where the cheapest money comes from.
Okay.
And that the reasoning behind that is, which, you try to tell somebody this, sometimes they really struggle with, but a guy who puts down 5% on a house is going to get a better rate than a guy who puts down 20% on a house.
Interesting.
So the logic behind that is the money's guaranteed. CMHC or GE or Canada Guarantee, they have insured this property, this mortgage for the lender.
Right.
And it's not, doesn't matter what happens.
Yeah.
An asteroid could hit the thing and it's insured. The money's guaranteed by the insurer. So the lender has zero risk, okay? Where the other way around, if you can put 20% down, 20% equity in a house is nothing. If you got to go power of sale, the power of sale bill could be, if the owner's not cooperative, you could be into 60,000 by the time it's all said and done relatively quickly. So there goes 20%. So the lender stands a chance of losing money. The rates can get a little more comparable once you get down around 35, 40% down, and then it'll be somewhat of a comparable rate.
What would be, is there usually a tipping point? Like, let's say I'm a first-time buyer, I've got my 20% down saved. Is it almost worth it to, put 19% down, have an insured mortgage at a better rate?
Great question. And I've actually had some people that have done that in the past. Because as you get, the more you put down, the smaller the CMHC fee is. And it's all about the kind of person you are, like money management, because you got to understand, we're in Canada, and we don't have 30-year mortgages or 25-year mortgages in terms of term. We have amortizations that long, but not term.
Why would somebody use a mortgage broker over a traditional bank?
So my quick answer to that is, a lot of people have a lot of faith and trust in the bank, like, the bank's my friend. The bank's not your friend. The bank's there to make money. You're just a number to the bank. I don't know if you've dealt with the bank much personally yourself lately, but it's getting an appointment is like, it's not easy.
Yep.
If you booked an appointment, you're probably going to be like next week or the following. We're a broker, we're available 24/7 essentially. My clients I'll get back to. I might not get back instantly, but I'm going to get back to you. Like, you're going to hear from me today or tomorrow at the latest.
Yeah.
And we're paid solely on commission. So, when you come to me to do your mortgage, we're best friends for 2-3 weeks. Like, we're going to get all the boxes checked off, all the ducks in a row, and we just arrange the mortgage. Where the bank, it's kind of like, well, I'm getting paid there's no motivation behind the bank employee to get the deal done. If I'm like, yeah, I can get you your mortgage, I can take this on, I'm seeing it through to the finish line. It's like my top priority. Where the bank, it's not like that. Like, we get a ton of deals from the bank, drop the ball all the time.
Right. And I feel like it's kind of the same as in like the real estate world where, yes, like our livelihood depends on the mortgage or the sale.
Right.
But in order to build like longevity in the business, if you take advantage or, drop the ball with one client, that reputation can get tarnished pretty quickly. And then especially
absolutely.
In a small town, right?
And everybody's, not perfect, obviously in the bank world. In our world entirely, like, purchases sort of take a precedent because there's tight timelines and whatnot.
Right.
And sometimes on a refinance, there's some tight timelines as well. If maybe the person's got some sort of legal issue going on, or they're behind or something on a mortgage. But just especially now, like when I first started doing mortgages, about 10% of the population used a mortgage broker.
Yeah.
Where in the U.S. at the time, it was 90% used. Canada has like the big 5 banks. In the U.S., there's thousands of banks essentially.
Right.
So the mortgage broker just was like it was more widely used down here. Up here, the mortgage broker kind of had like a reputation for like, it was private money only. And some people still think that way, still think we charge fees. And there is fees. If it's a private or a B deal, you're going to pay some fees.
Yeah.
If it's a cookie cutter A deal, 99.9% of the time there's no fee. We get paid by the lender, so our services are essentially free to you. So why wouldn't you reach out and just hear them out and find out, what they have to offer?
Yeah.
And just take a chance at it.
Gearing this more towards like, people who don't have mortgages yet, or like maybe have just gotten a mortgage. What is a rate hold and how long does it last?
A rate hold will secure your money for you at a specific rate. In our channel, the best rates available, those lenders, like as of today, they don't offer rate holds because they want to work with live deals only. The cost of pre-approving and underwriting a rate hold, and there's also a big difference between a pre-qualification or a pre-approved or a rate hold. Like, those are a whole,
They're all different.
Yeah, a lot of people don't understand that. They think, I can buy a house for $500,000, and if there's acreage or there's something wrong with the house, there's all kinds of different reasons. The rate hold is just simply securing the rate, and the lenders that offer it charge a premium for doing that as well. Basically, and it ranges usually from 60 to 120 days depending on the lender, but it's a good thing to do if you're shopping for sure in case rates go up.
So like last year would have been a really good time to get a rate
For
hold.
sure.
Yeah.
And now often, like I have 2 clients, I had 3 clients this weekend put offers in. I had them all on rate holds. I'm not going to use the lender that I put the rate hold with because I have another lender that's cheaper.
Right.
So I want to get the client the best deal.
So kind of in line with that, let's say you've just bought your first house, you've got a mortgage. Things my wife and I didn't think to include in our mortgage payment was something like our property taxes. And I know, my sister, for example, is on an accelerated payment schedule. So like what kind of options, I guess, to like your payments are there for somebody who's just getting into this and about to get their first mortgage?
So typically, if your mortgage is CMHC insured, I believe with all lenders, the taxes have to be paid.
Okay.
I'm pretty sure that's a rule across the board now, and that's simply because they want to just make sure the taxes are paid and there's not any defaults in the property taxes, which could cause an issue later on.
Fair.
If you're taking the mortgage, most mortgages, if it's a fixed term or variable, you can increase the payment or pay it 15 to 20% per year. When the rates were lower or if people were on a variable, I used to always tell people, take a variable, pay it as if it was a fixed. And then if the rates were to slightly go up, you're not even going to notice the difference. Like, don't take the variable for the cheaper payment.
Right.
That can come back to bite you, and it's bitten a lot of people in the last 2 years, let's call it.
Yeah. Okay. Let's say again you're looking to get a mortgage, and are there anything other than the obvious, like make more money, pay down debt, you can do to get a better pre-approval amount, or is it kind of just like this is the picture of what you're at right now?
It's in the end, it's all numbers,
Okay.
essentially, right? And the numbers don't lie, basically, is what it boils down to. Don't get me wrong, there's some instances sometimes with the banks where they've done an exception maybe that they shouldn't have done. But if your mortgage is what's called default insured, how it works is the lender has to fall within these parameters of GDS, TDS, credit ratios, all of these guidelines. The insurer, in most cases, unless there's something kind of sticky, doesn't even look at the file unless there's a default.
Right.
Okay. If there's something sticky, the lender might present it to the insurer and say, okay, are you aware of this? Mm-hmm. And then if they say yes still, then it's good. But if a default happens and the bank goes to the lender, to the insurer and says, hey, we want our money, then they're going to say, let us see the file. And if they can find one reason in that file that it shouldn't have happened in the first place, then it's declined. They're not going to get paid out. There is rumors of some of the big banks not even collecting on the insurance because they didn't follow the guidelines.
Right. Interesting.
It happens.
Let's say you're trying to look at getting into the market and, the numbers are what they are. Would you suggest, talking with a mortgage broker in order to determine what debts you should tackle first to get more money?
And nowadays the big thing is bank of mom and dad. Everybody's reaching out to bank of mom and dad,
right.
Either for more money down, co-signing. It's not like there's statistically, it's happening a lot more than people think. Mom and dad wouldn't have been able to deal with this housing market we're in, so how could they expect their kids to be able to? So
right.
it is happening a lot more. A couple of years back, my pitch when the prices were going crazy was, one of my pitches for calling past clients was, we better get Bobby a house here. We buy it as a rental for now because you're never going to be able to afford one.
Right.
So,
yeah.
and that pitch worked good for a while. Ultimately, again, the numbers don't lie. It's either you need more income, more down payment, or you need like a co-signer offering either one of those up potentially as well.
Right. Yeah, no, it's as a younger person, I'm still 32. Yeah, I always find it interesting when the older generation talks about, interest rates used to be 17, 18%, but your mortgage was
the house was 60,000.
Yeah. Like it's
the one I like about we paid cash for everything. Yeah? Well, you didn't go to college and there wasn't a credit card company handing you 2 credit cards when you walked in the door.
Yeah.
Like it's
I signed up for one for a free blanket.
The game's changed. You know what I mean? Credit card debt in December in Canada went drastically rose. And that back in the 80s when you're talking when rates were that high, there wasn't that amount of credit available. There's so many different credit card companies and all kinds of different ways to borrow money nowadays.
Mm-hmm. I think there is some good about it, but it's also kind of scary.
100% it's scary. 100% it's scary. And on our side, you know, we push the government. It should be more regulated, somewhat regulated buying a car. It's definitely regulated buying a house. But the credit card aspect of things should be a little more regulated.
Wild West.
Like I've never verified income on a line of credit or something at a bank maybe, but on a credit card, I've never verified income. I fill the form out and it's like, bang, you're approved.
Yeah.
They don't ask for anything.
Let's say you're shopping for a house.
Mm-hmm.
What things should you do or at least keep in mind during that time period where you've got all your information into your mortgage broker, you're out with a realtor looking at houses?
Yeah.
You know, what things should be on your radar and what things should you absolutely not do? Because I mean, you hear like the typical, like, you know, don't buy a car, don't start a new job, that kind of stuff. What are like the hard rules of like do this and don't do this?
Yeah, so those are exactly what you just said. Maintain the job. Don't buy or finance anything. Don't co-sign for anything. Keep everything sort of status quo until you get to that point where the house is closed. Now I actually have like a list where it's like, do not do this, like, and I make them sign it, because you can go over it and tell them, and they just, you know, they're on cloud nine. They just got a house and now they want a new truck parked in front of the house, and it can happen. I've also seen people lose their job before. Like one time we had a lender call and they're like, yeah, we did write that letter, but unfortunately we're terminating her today. And it's like the lender knew before the person even knew.
Wow.
So
Wild.
Lots of things can happen.
Thanks everyone for stopping by. If you liked this video, make sure you hit the like button. If you really liked it, hit subscribe, and we'll see you in the next one.
Have a great day. Thanks everyone.